Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we talk about the latest stock market trends and also help you really understand which are the sectors and the stocks that are buzzing in action today. Let's quickly take a look at the markets right now. We did see that overnight Wall Street, there was a sharp reaction on the downside after the US Fed again increased the policy rates by 75 basis points, and the hawkish stance on the interest rate still remains. That's what really spooked the street, Wall Street especially, and then the Asian markets as large. We also saw a gap down opening in trade today, although the markets are slightly pulling up from those low points of the day. 0.3% of a downtick still remains. The broad indices, Nifty and the Sensex, if you talk about, there is a downtick. 55 points on the downside for the Nifty currently. The Sensex at 60,729 as well, with a cut of 175 all points at this moment. But the good part is that the 18,000 mark is still retained on the Nifty. On the sectoral indices, you can actually see buying is seeing in banks, in FMCG, while the autos, IT and the infrastructure sectors still remain under pressure in trade today. Apart from this, if you also look at the kind of move that we are getting in the broader market space, those are the top gainers on your screens right here. Bajaj Auto, Bharti Airtel, Axis Bank still holding up despite the overall muted trend and the subdued move on the markets today. HDFC Life, SBI, Bajaj Finserv, so a whole lot of financial services names, whole lot of PSU banks and private banks that are still holding up in trade today. Some of those FMCG counters like Britannia up in trade, Titan also up by 0.5% odd in trading action today. But on the downside, you will see some pressure building up as far as the top Nifty 50 losers are concerned. You will see Tata Consumer Products as down, ONGC, Hindalco, all of them seeing cuts of over 2.5%, 3.5% odd. Look at Tata Consumer Product. There's a sharp downtick of 7%. Tech Mahindra, Power Grid, NTPC all down by 1.5% to 2.5% odd as well. Some profits being taken off the table, some pressure coming in because of the global market moves. Eicher Motors is down, Tata Motors, Infosys. So right after those sales, we are seeing that the auto sector is also dragging in the slower rain as we speak as well. But we will speak about a whole lot of stocks that are buzzing sharply in trade as well. Let's welcome today's guest. Nilesh Jain joins in from Centrum Broking, the expert of technicals and derivatives. Welcome, Nilesh, and thank you so much for taking the time out for this discussion. First up, help us understand how are you looking at the markets at this point in time. We did see that there has been an overhang of the US Fed move. There is the RBI MPC move again today. We can expect some decisions, but although not on the rates, but largely on how the RBI is really going to be tackling inflation. But overall, technically, how do the markets really look?
Very good afternoon, Sakshi. Sakshi, if you look at the major structure that continues to remain on a positive side, and in spite of the weakness across the global market, our market are showing some sort of a resilience as we have seen some sort of buying coming in from the lower levels, and due to which Nifty managed to sustain above 18,000 mark. Now, on the other hand, if you look at the Bank Nifty, which has turned into green and also defended 41,000 mark, that is acting as a psychological support zone. So it is very interesting that bankings are leading, and that is certainly a positive sign for the Indian equities as well. Looking at the overall structure, I believe that we are still likely to see the levels of 18,200 on the higher side. And if it reaches 18,200, then certainly we are heading towards previous all-time high levels. But for that, we might need to wait for some more time, as we have already seen a good amount of rally recently. So some sort of consolidation that cannot be ruled out. And also today we have a weekly FNO expiry. So we believe that expiry could be in the range of 18,000 to 18,050. Last, if you look at the volatility index, which is hovering near 16.38, that is very much in the comfort zone. So looking at the volatility index, I believe there may not be any major downside or up move. We can expect some sort of a broader consolidation in the range of 17,800 to 18,200.
Okay, understood that. Also, Nilesh, if you could help us really understand some of the stocks I'm going to pick out for you, so share your views on those. These are those stocks that have reacted sharply post their earnings. Now, let's talk about M&M Financials first. The stock is up, rallied about 10% odd in today's trading session, and this is despite the 50-55% decline that we saw in the consolidated profit. Although some analysts believe that this is definitely better than the expectations right there, some disappointments here and there, but the stock has really rallied sharply. Your thoughts on M&M Financials? What should be the investor strategy here?
If you look at the overall structure in last 8 to 10 trading sessions, we have already witnessed a good amount of correction from 215 to 190. And ahead of the numbers, since the correction has already priced in the worst numbers that has come, and now the market has certainly reacted on some sort of positive side. Looking at the overall structure, I believe the major structure still looks positive, and it looks like it is heading towards 230 mark in a very short term time frame. So it is not advisable to buy at current level post a 10% gap up that we have already seen. So one should wait for some sort of decline below 210 to 208. That could be a good entry level with a stop loss below 190 and upside is open for 230.
Okay, understood that. Also, your thoughts on Relaxo Footwear. The stock has actually reacted sharply again on the downside. In fact, it tanked about 7% in the initial trading action at a 52-week low level after the weak set of numbers that have come in on the Q2, where the EBITDA margins have declined to 8.9%. That's down about 450 odd basis points on a year-on-year basis. Also, there is high raw material cost that has really put pressure on the operational profits of the company too. So, keeping an eye on that, how do you see the stock really performing from here on? 4.5% down right now?
See, from footwear space, we have already witnessed a good correction in Relaxo. In last 1 year, if you look at the counter, exactly a year back, it was trading at 1440. Now it is currently at 930. So good amount of decent 45% correction we have already witnessed. Now the structure, no doubt, is not looking that promising. I would suggest to better avoid taking any contraband for the time being. Reason being, we have a good competitor in this particular space, counters like Batra India, Meriza International. So these are the stocks which are still available at a good valuation. So in this particular counter, I believe there may be further downtake, and that may take this particular counter towards the levels of 860 to 850. So for fresh entry, better to avoid for the time being, and those who are already holding the long position can keep a stop loss below 850. And on the upside, the immediate hurdle for this particular counter is placed at 1010 levels. So till the time it doesn't break the 10,000, the 1010 levels on the higher side, we can expect some consolidation with slightly negative bias.
Okay, and one more stock which has clearly been investors' favorite all through this year. I'm talking about the FMCG giant ITC. That stock is also hovering near its 52-week high levels. We've seen that the stock has jumped 60% on a year-to-date basis. There's a sharp move on the upside. We were also discussing, similar stocks like Godfrey Phillips yesterday as well. We've seen some sharp moves on that as well from the same basket. But ITC, what are your thoughts here for all those investors who have held the stock through this kind of a move on the upside, which has come after a long time? What should be the right strategy for them? And for those who still want to tap this momentum, is it fair enough to enter at this point in time?
Well, Sakshi, it seems like ITC is having this dream run. For the ninth consecutive month, we have seen a good positive momentum.
Yeah.
And that's the ninth winning streak that we are currently witnessing. And it seems like that it is likely to continue further. Now, looking at the recent run-up, there could be possibility of some sort of a sideways move, some sort of a consolidation, but that's the opportunity where fresh entry can be made. And the better strategy would be buy in a staggered manner, buy in multiple tranches. I still believe that earlier, as we have already highlighted, our target of 400 is very much intact from next 8 to 10 months perspective. And on immediate basis, at current level, we are not advising to go long. Better to wait for some sort of a decline below 340 or 330. That's a good entry point. The stop loss should be placed below 310, and our upside target is very much intact of 400.
Okay, understood that. Let me also take you, to the primary market space and the action right there as well. We have been seeing after a long haul, suddenly one after the other, the primary market space is buzzing again with one after the other IPOs opening. Today also we have two IPOs which have opened for subscription for investors. I mean, Global Health, that's Medanta, and also Bikaji Foods. Now, both these are varied, diverse sectors they come from, and obviously both are very, very popular and have established brands as well. Your thoughts on either of these IPOs? I know that there is no technical historical chart for you to study right there, but your thoughts on these two IPOs, because that's the flavor of the day. Investors are also focusing on that part.
Well, actually, I was going through the RHP of both the stocks, and we have also gone through the IPO notes. So as far as Bikaji is concerned, it looks slightly overvalued and slightly expensive compared to the peers. And at 90 plus P, it looks very much expensive. Whereas you have better option available in the market. In the listing space, you have Nestle India already listed. And also given the fact that we have seen a sort of correction in the Pratap snack post listing. A similar sort of structure can be seen in Bikaji Food as well post listing. So purely from listing gain perspective, one can apply. And long term perspective, I still believe there are better alternatives available from an unlisted player. We have Haldiram from listing players, as I mentioned. There are good the FMCG giants are available at a decent valuation. So overall, Bikaji, from a listing perspective, listing gain point of view, one can definitely apply, and it's not a long-term bet for the time being, and we need to review again post. Now, on the other hand, if you look at the Global Health Limited, that is reasonably valued and looks attractive at 38 P. It is reasonably valued compared to the Apollo Hospital, and overall, looking at the price band, it has 390 to 336, and a number of the IPO, the money they are raising of 2206 crores, that constitute of 500 crores of shares they are offloading. So out of it, the interesting part is that part of money they are using to reduce their debt, and that's a good sign overall from a longer term perspective, as well as from listing point of view. This particular IPO can be applied, and even if we see a nominal listing gain, but I think on listing day as well, one can definitely buy once it gets listed, and the time horizon should be slightly from a longer term perspective.
Okay, understood that. And now let's get down to understanding your stock specific recommendations for the day. Although the markets are muted, but are there any stocks that could definitely, in positional basis as well, give good returns to investors?
Right, Sakshi. So I have two buy recommendation. So we are very much positive on the banking space, and the kind of run-up post numbers we have seen in KTK Bank. I think similar in line with the similar numbers, Federal Bank is likely to do well. So technically, the counter is making a height of an habit of formation. The upside is very much open for 146. Stop loss should be placed below 131. From insurance space, we have seen a lot of underperformance in the HDFC Life particular counter, and now recently it has formed a good base near about 500 and 520 mark. So one can buy HDFC Life at current level for the upside target of 565 on immediate basis with a stop loss below 535.
Okay, understood. So two stock recommendations from Nilesh today: Federal Bank with a target of 146 and HDFC Life for a target of 565. Well, thank you so much, Nilesh, for being with us on this show and sharing all those insights which are valuable for all our viewers. Thank you very much. And with that, let's quickly take a look at how the markets are trading, and then we'll wind down the show. Sensex at 60,720 with 185 points of a decline right there. The Nifty also down by 60 odd points at 18,021. Will we see a reversal? Will we see the bulls coming back in the last 2 hours of trade? We'll keep an eye out on that, and for that, you should also stay with us on Business Today TV for a whole lot more information on markets and business news right up next on your screens.